Ladies and gentlemen, shake my hand and welcome to another 365 Trading Academy Traders War Room. I must apologize, my voice is very hoarse. I'm going to do my best to try and fix the audio in the editing stage of this video, but I thought it would be important to still put out a war room. I'm not doing too well, but I've had a great week as a trader, as a head coach. We had this amazing time. We spent the time in Port Elizabeth for the last 4 days, looking at different ways in which small financial firms can take advantage of financial markets. They are, generally speaking, arbitrage traders. That's not really my expertise, right? So we were teaching them, a different type of hedging, supply and demand, etc., etc. And it was amazing, right? I've got a lot of stuff to talk to you guys about. I'm going to try and get through it, despite my throat, and see how far we can go. But maybe before I go too far, it's absolutely important to take the time to perhaps reflect on what's been going on in the markets. We've had a couple of war rooms since the time I've been back. Right, so since I've been back, we've had about War Room 73, War Room 74. There are two big war rooms in sum total. And I was having a look at my trading P&L for the war rooms, right? So I have a specific account where I only trade these war room setups. And today, I want to quickly look at what we've done. And then I also want to go back to War Room 73 at the end of the video anyway. So there are going to be a few charts that I'm going to bring back because we're still waiting for entries. And we want to make sure that those trade ideas have not yet expired, all right? But just to maybe quickly refresh our memory on how things have been going, because I think they've been going quite well, but it just depends on how you observe and understand things. But here you have an interesting scenario. Like I said, we've had two big war rooms, and this is how I expect your trading to be. Right, I'm sorry, I'm just going to annoy you with my throat tonight or morning or whenever you see it, right? And I'm just going to ask that you bear with me, right? Traders War Room, right? So let's go War Room 73. And this is really how I expect your trading to be going. So in War Room 73, if you go through the video, right, if you go through the channel and you actually sit down and listen to everything that I say in War Room 73, the signals that I gave you, the no trades, no real setup, the wait here, buy here, sell here, I looked at 17 charts in War Room 13. 17 charts in War Room 13. And they kind of look like this for the most part. And I found this so interesting because I don't know if traders are still documenting their trades. I'm not entirely sure if you guys are documenting your trades. You should be. If you're a registered student, it's an absolute must. You must have a journal. You must have a systematic way that you review your progress. In War Room 73, which happened about 2 Sundays ago, this is where we are, all right? This is where we are in the market space, right? So I never took the trade on the DXY because the DXY was already dropping without us or something along those lines. Pound USD has done 172 pips. This is an entry on the daily. So the risk to reward ratio is actually better if you find your area to H4, H1 like I teach you. But because when I do war rooms, I always look daily, sometimes H4 because of time. I'm going to keep it like this in case someone literally just took a daily entry, right? But if you know your multiple time frame analysis, you should have scaled down a bit. But we're up 172 pips on that. USD Swiss franc, we're up 86 pips on that. AUDSD, Swiss franc JPY, pound JPY, we are waiting. We made no money, made no losses, we're waiting for those particular trades. USD JPY, we are up 57 pips. And I'll show you this thing on the charts right now. And I'll advise everyone to break even on specific charts. But we're up 1-5 there, which is really nice. CAD Swiss franc, we're up 94 pips. And then here, pound AUD, I say no trade, right? There was no trade signal, there was no actual setup. And so, we left it alone. USD CAD, AUD CAD, USD CAD, we're waiting. AUD CAD and CAD JPY, these were great trades, but I missed them. I missed them by 1 or 2 pips. I don't know if you guys are in them. If you're in them, let me know down in the comment because that would be awesome. But I unfortunately realized that my entry point was not triggered. So the analysis is great, but I can't add it here as a win. A win for me is real money on the table. Like I actually have to have been fully engaged in that particular market and made money. So I wrote miss, but it was given. And so if your spread calculation was better than mine, or the way you drew your proximal line, or your area of competition was better than mine, then I'm absolutely proud of you and you know, and good for you there, right? No trade setups for these ones is what I said in War Room 73 when I made War Room 73. Then AUJPY 74 pips up, right? So War Room 73 with no losses yet, right? It's just money now. If you're a swing trader, you're holding positive running trades, right? Pause. Then last week Sunday, I came to you guys and I did War Room 74 with you guys. And maybe in detail, I can break this down another time. But I just really want to point out something so clear and cut, that this is how you accumulate safely, slowly, but safely. Yes, depending on your capital, your lot sizes might be small. That's not my fault or anyone's fault. It's just how it is in your life right now with your capital. So you have to grow it. You have to grow capital with good trades, right? It's that simple. Either you keep adding, but if you don't add on the skill side, you're going to lose that money, right? Now, AUD 74, these trade setups, I didn't take them fundamentally because it was NFP week anyways, and you know I always tell you guys, markets always consolidate 2 to 3 days before, never trade news events, blah, blah, blah. So we are watching. All these trades have arrived. Some of them actually have arrived at key supply levels. And by the way, the supply level on NASDAQ has been activated for long-term trade. So if you're in that trade, it's not because I gave it to you in War Room 74, it's because I gave it to you in the last FOMC meeting earlier on. That's where NASDAQ fell from on Friday, right? And I'm saying that to say, we are in that trade, but don't add it as a War Room number 74 trade. It's a pending order we set a long time ago, and NASDAQ fell because of NFP numbers, right? The job numbers were ridiculously big. They were absolutely crazy, scary. I don't know what's going on with my camera, you know, it's on and off, but I hope it's not distracting, right? So NASDAQ, S&P 500, all these are trades from different War Rooms, so I'm not going to include them here. They are positive, they are running, but it's not what we want to include here. Right, DXY, the buy that I wanted, you know, markets didn't get that low. Markets took the first buy above, so I wrote waiting. I'm not in it. I'm not counting anything. Euro pound waiting. NZD USD were up 81 pips. Euro AUD were up. We're waiting. We're waiting for silver. NZD cap, I said no trade, as in there was no setup for me to point out, so I didn't point out a setup. Gold, Euro USD, Euro Swiss franc, NZD Swiss franc. Well, these are all wait. This is a swing trade. If you're an intraday trader and you're doing well with my scenario analysis, and you know, granted, I had a few losses on, or I had 1 or 2 losses actually on Euro USD this week on scenario analysis in the 1 hour time frame, but there was nothing too shell shocking, right? Markets broke structure and then went up as a setup for NFP, right? So it's something that I missed out on Wednesday. But so these are swing trade ideas that we're waiting on, but you can be making your money in between, right? And then NZD JPY we're up 133 pips, and then Euro JPY I had a stop loss hit, and the distance between my area of value and my stop loss was just 15 pips. So that's how much I lost, right? So in both War Rooms so far, this is War Room 74. I'm going to put it here for you. I really want you to see this, man, because if you start thinking like this as a trader, you might start to understand my original philosophy around trading in clusters. This is kind paper tea with ginger and all sorts of stuff that my partner made for me, right? So this is the actual, situation that you have. You've got War Room 74 and War Room 73, and all these trades are starting to run. We've got a lot of trades in the background that are still waiting. Without talking about money, because I know it's a big thing for traders, but it's quite a very destructive thing, because if I tell you how much I've made, I don't want you to assume that's how much you should have made, right? How much I've made is based on my capital, my risk management, and my lot size allocation. How much you're going to make is the exact same thing. It's based on your capital, your risk allocation, and how much you have, in your lot size allocation. But if we have to talk about pips on pips, if we talk about pips on pips together, ladies and gentlemen, I have given you 697 pips in 2 weeks, right? This is in wins, 15 pips in losses. That's the only stop loss I have in the swing trade idea. I have given you, I'll repeat again, 697 pips in wins, 15 pips in losses, and we have 13 combined trades that were still waiting. So some of those combined trades today, we're going to look at them, right? Not a lot of them actually. We're just looking at about 5. Because today I want to start the war room with different sets of charts. I want to look at a couple of different things. but I will repeat myself, 697 pips in wins, 15 pips in losses, which is actually just one trade. One trade so far, where your time on Sunday is accumulating and growing your account. So if you're growing your account, I'm happy for you. But if you're coming to war rooms and you're not really organized, you're not setting the pending orders, yay, I'll start a fight. But you're actually not setting the pending orders, and that's something that you're gonna have to work on. That's discipline routine. All right. So please, I thought I'll give you guys a quick update on this stuff because it's actually interesting. Remember, I'm a set up for Get Trader at midnight. If I'm still up, I set my pending orders, pow, and I go on with my week. The only trading I'm doing during the week is my scenario analysis on about 10 different charts and indices and all that kind of stuff, right? So my intraday trading is set up that I have to be on it. So if I'm busy that day, filled with meetings, I'm not intraday trading. But my swing trading is on autopilot. It's on a complete set and forget rules, right? So we will, kind of like quickly go through, maybe some charts just to give like some meat and some flesh to what I've just discussed. But I really, really hope this makes sense to you, right? So, if we're to look at a couple of things today that I really want to talk about, I would like to bring to your attention a couple of major market things, right? Oh, and this is an old war room, by the way. I thought I should start with this real quick. I had a stop loss hit here on China 50. It's unfortunately not part of war room 73 or 74. I gave you guys this China 50 buy trade idea in War Room 71 on the 12th of June. So if you go to the 365 YouTube channel, you'll hear me talking about this buy level here. And my stop loss got hit right there. Right. So, now I'm waiting to see what that means. Because it looked at the time, almost a month ago at the time when I looked at this chart, this looked like a very good place to really start a resuscitation phase. But I'm assuming given the Evergrande crisis, I don't know if you guys have been following, if you remember me teaching you about this stuff, the housing crisis, the $70 trillion US dollar market, not US dollar, but housing market in China has come crashing down. And it was a big reason why China 50 fell last year. And the ramifications of the housing market and the housing crisis is starting to grow, tentacles. People are starting to pay attention to it only now, right? So this might be an interesting part for China 50, where we might start to see some serious price decline. If I'm looking at this thing clearly on the weekly time frame, I can see we've already invalidated a weekly time frame and come to retest the weekly supply to continue the trend. And so my buy in hindsight, a month later, setting a buy here, I would not have known all the different fundamental events that have happened since then. But to me, I would suggest that we give up on this idea of buy. If you're in this buy and your stop loss was very wide, right, and you didn't get, hit, I would suggest you really start thinking about breaking even and getting out of this trade completely, because, if the downtrend continues, then we're most likely seeing, very soon a change of character in the markets, right? So markets might not actually make it all the way back up there. So markets won't do something like this. Instead, you're going to get, I suspect we might get a situation that looks like this. And this will then start to confirm the lower highs, right? So when all of a sudden your market structure starts to look like this, then you know that, downtrend is really, is continuing to the downside, which means buying here is not a good idea. So I just thought I'd bring that up. This was our loss from War Room 71. China 50 stop loss hit right there. And the reason for that is just the intensification of the housing crisis, back there in China, which has got a lot of massive global implications, which I hope, in my other videos, I'll make time for. Because I'm not feeling well, ladies and gentlemen, I just really want to get straight, to the point and the heart of the matter today. So the war room won't be as long as it's supposed to be in general, all right? But a big part of me feels like I should maybe just break down some charts of the ones that we've won, show people where to break even, etc. But maybe we can do that another time, right? So NFP was this past Friday, right? And maybe while I still have your attention and you're still, fresh and eager to learn, please don't forget to subscribe on our YouTube channel. Please don't forget to subscribe on our YouTube channel. If you're already watching right now and you haven't subscribed, you need to feed what feeds you. It's kind of like a universal principle of wealth, actually. You feed what feeds you. Like, someone takes the time to feed you, take the time to feed them. And I don't want your money. I don't want you to save me money. That's not what I'm asking for. I'm not a pastor. I'm not trying to run an offering basket. I'm saying please share my channel, please subscribe to the channel, right? About 40% of our viewers on the channel religiously come but are not subscribed, right? So we do like the stuff. So just become an official free member, of our YouTube channel, right? So I do post a lot of things. I promised you guys last week Sunday that the podcast will be back this past week, and I met that promise, but I started the promise quite late. So episode 35 and 36, which was Thursday and Friday, are already on the channel, right? I promise you, the podcast will have a bigger impact in your life than the war room that you attend. I promise you. A year from now, with a lot of consistency in going through these brilliant books about wealth management, personal development, wealth creation, all the answers, all the things you've ever wondered. Why do rich people make it in life? Why don't I have a Ferrari if you want a Ferrari? If that's what you do, if that's your idea of opulence, well, all that stuff is dealt with in the podcast. Right now, I'm already taking too much time. You want to hear charts. You want to get signals. So please, the podcast streams every day, Monday to Friday, not on weekends. And it's just a new episode on a new chapter of the same book until we finish the book. Right, so I did start that out. But anyways, there's a lot of good stuff on this channel. Please do subscribe, share it with a friend. I would very much appreciate that. Right, now let's just quickly rewind a bit and reverse and find out what on earth happened on Friday. Because remember, you have to remember the markets are currently like sitting at a very, very hot sit right now. FOMC has said it time and time again. The most important thing that's going to happen between now and the next Fed rate hike is that we're going to have to be looking at a series of data. There's some specific data points that are absolutely crucial to what the FOMC is going to decide to do when it comes to an interest rate hike on the 21st of February. And traders, I have to tell you, I've been trying to quickly show you and illustrate to you time and time again how important these data points are, how important understanding how Powell thinks through the market, how the FOMC thinks through the market, how that's linked to the stock market and indices, and how that affects the forex market and crypto market, right? These things are very much conjoined to the hip. Sometimes they discorrelate, sometimes they correlate, but it will affect your trading, even as a supply and demand trader. So it's not too much to ask, right, to focus on these things, to put our proud results up there in the corner, because this is amazing. These are free signals that are making people money just by attending. I absolutely love this stuff, right? So here's my thought process going into this coming week, right? NFP was twice hot. I really hope you guys picked that up. I did see a little bit of chatter on in our public Telegram group. So thank you for that. I think it was Alvin who started the conversation. So I remember sending in a little bit breakdown as well there. But I want us to really understand what this means and what do I mean by twice as hot, and more importantly, what are we supposed to be looking out for? Right. So I'm on Forex Factory. I'm going to pull out the data. Gotta see this data, guys. It's absolutely bananas, right? Now, we have an interesting scenario. I'm just looking for Friday. There we go. Friday was all green, man, even for CAD. And it's time to take CAD news seriously, Euro news seriously. I saw there was some interest rate stuff when I was in PE around the Eurozone, on Wednesday, Thursday-ish, and it affected the market. So you need to kind of like be aware of these things. But here's the fun part about it, right? Number one, has anyone noticed that in the last 2 months, the month where I was away, I'm sick again, but I don't think I'm going to be away this time. I'm on it tomorrow. I'm seeing my doctor. I'm getting antibiotic. I'm tired of being sick and fighting the flu. It's just, yeah. But when I was away, I don't know if you guys noticed this, but ADP is no longer here, right? You might find it on, highly subscribable. So I've got a Bloomberg server, but it's very expensive. So most retail traders wouldn't have access to that kind of stuff. But ADP doesn't show up on Forex Factory anymore. Right, and we like ADP because ADP gives us some type of hot or cold indication to where NFP is going to land, right? So it kind of like changes a little bit, our trading game. But check this out. So on Friday, data drops, and on the unemployment side, the expectation is 250K jobs. That's the expectation. That's what the markets believe. right? That's what they believe they're going to get, like 250K jobs. That's wild. But what comes out is 528,000 jobs were created in the month of July. Now remember, July is a significant month because Powell is on stage in front of the world saying, I don't think America is going into a recession. I don't believe we're in a recession. Look at the labor market. Our job numbers are good. Look at the labor market. I don't think we can use GDP as an indicator. I know it's the classic way of defining a recession. 2 negative quarters equals recession. That's not a debate. Powell is wrong about that. What Powell was hiding behind, he kept telling you guys, kept telling all of us, listen, look at the job. I'm just going to look at the job numbers. I'm going to look at the job numbers. And in that same month of July, literally the economy, according to the data, created double the expectation of jobs. Right? That's big. That's very, very big. Because now Powell's like, I told you, all right? A little bit. He's not right about the recession, but he is right about the job part. But NFP becomes twice as hot. Now, this is interesting because, as you know, the next federal meeting is on the 21st of September. So it's a date to mark. We will be running a live feed, so do look out for that. This is a very, very big, important date to mark. The next federal meeting is on the 21st of September, where we're going to have a federal interest rate hike, a decision essentially to say hike or don't hike, etc. And in that particular meeting, if we go with what we have right now, which is NFP created 500 and something jobs, so let's just write 500K jobs here. This means currently right now, we have an economy where there is more hiring of people right now in America, all right? And also we have an unemployment rate that is falling. Yet things are supposed to be bad, right? Things are supposed to be bad, right? There are with recession, right? And it's easy for short-term investors, newbie investors, and also, unwell-rounded, educated traders to make the mistake, of assuming that because the data is showing strong job numbers, the economy is good, right? The rainy days are over. And I want to just take 10 minutes of this video to break that down to you so that you know what you're trading in the following week. Now, before I do that, I just want to bring this up because this is what Powell wants, right? So Powell says you're going to look at 2 reports between now and the 21st of September. Look at the job report, you look at CPI. In the meeting, though, he did say CPI is for you retail traders, for the public. We look at CPI because you guys want us to look at CPI. We look at PPI. So we look at the price fluctuations from the producer side, from the manufacturer side. CPI looks at price fluctuations when they affect the consumer. So Powell is looking at how is the farmer struggling with inflation? How is he pricing his products from the farm? CPI is looking at how much is the product at the shop, right? When Leroy is now going to buy potatoes for 50 Rand, right? And last month potatoes were 47 Rand. Like that's CPI, the fluctuation of inflation between the consumer's relationship with products. But they like to see the source, right? So he did make that distinction. So I would suggest you keep an eye on PPI, right? CPI and NFP. Just three data points, Basalani. Just 3. It's not a lot. It's not hard. It's just you. Now, here's what these dates look like. Now, the next job, we've already got 1 job report this past Friday. And we know that NFP was twice as hot. Well, there were a lot of jobs being created. The next jobs data left before the Fed meets for the interest rate hike is on the 2nd of September. And we have a CPI data reading this week on my little boy's birthday, the 10th of August, all right? This is a big time for CPI this week. And then after that, the next CPI reading will be on the 13th of September, my little brother's birthday, right? Interesting, right? Birthday boys. On the 13th of September. And so the combination of Friday's NFP, CPI this coming Wednesday or Thursday, and then and then job data on the 2nd of September, and CPI on the 13th of September is the major reason why Powell is going to go 75 basis point, 100 basis point, 50 basis point, right? And those type of interest rate hikes, whether it's the 50, 75, or 100, is going to rock the markets. Now, markets, remember this part. Price is everything. That's number one. I teach you this in my module one. Module one, module one, module one. If you've not done a module one and you're watching this video, the link down below, click on it and enroll for the course to get module one, module two, etc. Because those are the basic stuff. You have to understand this. Price is everything. I'm slowing down today because I've got a lot of charts to go through, but I must teach this thing. Price is everything. That means everything that we need to know about the market, we infer it from price. But prices in everything. The markets are a future predictor. That's why indicators don't work. I don't know if anyone's told you this. Indicators are based on lagging past data. It's not about the settings, right? Don't write settings in my comments there, but you can change the settings. No. Your indicator will always lag because the thing that your indicator is trying to assess is not the present price of an asset. It's not the present price of a stock, of USD, or Bitcoin, because the markets are continuously pricing in the future in what you're seeing right now. Your broker's job is to fill orders to catch up with. Are you with me? Just like the video if you're with me, man. Right, so now prices in everything. So now, between now and up until the 21st of September, given the fact that we've got one more job data report on the 2nd of September, on the 10th of August, we've got CPI. On the 13th of August, we've got another CPI, and on the 13th of September, I guess, right? And between these three big data points, job data 1 and 2 CPIs, by the 21st of September, the markets would have started to price in up or down what they think the Fed is going to do. So that's the market you're trading from this week onwards. NFP is out. If you thought money was being made on Friday, trading market volatility and spikes, you missed out. You still haven't understood it yet. Read Rob Booker, Adventures of a Currency Trader. Right, the real trade of NFP starts this Monday, because now markets are like, damn, NFP is twice as hot. Right, damn, Powell brought this up a couple of times. Damn, but we know we're in a recession. Damn, what does this mean about the type of interest rate hikes we are going to get? And can the stock market rally up now to get gains now because they fear being crashed on the 21st of September? We saw it on the 14th and the 15th of March. Go to your NASDAQ chart. Markets priced in. They priced it in. This is what it means. So as soon as Powell stepped into the plate, markets pricing the fact that now this man's going to shut us down. This man's about to kill demand. And so for the 14th of March, even though we called for a market bottom and we got the market bottom, the market still rallied to the downside. Here it is there. This is the 14th of March. Markets priced in an interest rate hike that was going to be phenomenally hawkish, very violent, and so the market crashed. So now you've got this interesting incline on the NASDAQ and just in general most assets. And we want to be on the right side of history. We want to make sure we do our best to speculate and price in the right thing. All right, so now just give me 5 more minutes to break this stuff down with you, please, because it's absolutely important. And if you're bored and you need to kind of like stretch your hands, hit that like button. Don't forget to subscribe. Hit the links down below, and you know, save yourself some pain. Now, if all these readings are bad, and let me just quickly bring this to your attention. If all these readings, all these things that I'm talking about are bad, and I think today we have to define bad. What is bad? Now, if all these things are bad, the things that I'm telling you right now, if CPI is bad, 2 CPIs, and the next job data is also bad, we are in trouble. All right, we are absolutely in trouble. Now, this is the first thing I want you to understand. All right, the very first thing I want you to understand. Readings are bad. Markets will have to price in the likelihood of high interest rates come September. But we have to be careful. What do I mean by bad? Well, what's bad? Well, was NFP numbers bad? Because it was a beat. Markets were expecting 200 and something jobs, 200 and something thousand jobs. Markets created 500,000 jobs, right? Literally dropped unemployment from 3.6 to 3.5. So what do we mean by bad? I really want you to start to think about this, because I know for a fact that you also know that if the data comes out, things are going to change based on this. Now, but because again, remember that the Federal Reserve is trying to drive interest rates up to limit spending. Like, let's just stop on that point. The whole point of the interest rate hikes. The whole point is to kill demand. I've explained this many times. I'm the Reserve Bank governor. I have to choke the people with the means. The people with the means are rich people. Poor people rarely have chance to invest, not because of lack of resources, but because of lack of knowledge. If you're poor and you're watching my video, you're not in the markets investing because you don't have money to invest. You just don't know how or why. Watch the podcast from episode 1. Start from Science of Getting Rich. Happy Money by Ken Honda, the richest man of Babylon, with literal principles of why every single poor person needs to be engaged in a machine like the markets to make yourself wealthy. But the Fed knows that the rich people with disposable income, when you become rich and you own a house, you don't pay rent. The money you could be paying rent for, because you're rich and you still have, you can start to buy stocks. When you start to buy stocks, you can start to buy a house, another house, and another house. Those become property investments. Those property investments bring you extra capital. You go buy more stocks, more crypto, more financial assets. Those bring you money. You start to buy shares. You start to own companies. Rich people have what is called disposable income because of what they did with their first $100. It took me a while to learn this. I never release any money in my life unless I'm sure I can double it. I don't borrow people money. I don't borrow students money. It will taint our relationship. And when I release money into projects, into the stock market, it is a doubles game. I give you $2, I want 4. I give you $5, I want 10. The $10 back. Right? It's the parable of the talent. It's an old biblical principle. You have to teach your money to become a good and faithful servant, to bring forth after its own kind. Right? So if I put $100 on Bitcoin, I am not getting out of that market until that market gives me $200 back. Okay? You can hear my voice is squeaky. Right now, so what the Fed does is he targets such people. He targets people with disposable incomes and middle class people. Remember, if you have a job and you work for the government, you work for a hospital in South Africa, you have a pension fund that is deducted every single month from your salary. That pension fund goes to the financial markets. The biggest trillions, talking about trillions, called PIC. Look it up on the internet. PIC. It literally launders a lot of billions and billions of rands from public servants and different people, different companies, of all their workers' funds. They give that money to people like me, asset managers. We then cook the money, bake the money, spin the money in the market, take a big cut, and give people back their pensions. That's why I don't like working for corporate, because it's evil. Someone will give you their pension and you will spin it 25 times and give them back $1 million when they're now 65, when they could have had 50 million, 20 million, which is why it's important to learn to do this stuff yourself now. Hit the link down below. Now, because of this, the Fed is trying to limit spending amongst people in business. The people can actually afford these things. I prepared these notes for you so that you really, really understand me today, because I really hope we can move in unison. I want us to be absolutely united moving forward when it comes to this kind of stuff, so that you know, because a lot of things are going to happen fast. I truly believe the third financial quarter and the fourth financial quarter of 2022, a lot of things are going to happen fast. The Fed's going to have to play footsie with you, because the dragon recession hasn't gone anywhere. Right? It hasn't gone anywhere. Now, I want you to get this. Now, it's a double-edged sword, because if the data comes in hot like NFP on Friday. NFP on Friday was hot. It was positive. There were more jobs being created, but geez Louise, the experts, the financial analysis, the Harvard economists, the bankers all thought the economy was going to produce 232,000 jobs. It created 500,000. So that data gets hot. Now, which could mean the economy is still overheating. The economy is still on fire, right? It's still producing a lot of money for people. Now, when you have a lot of people making a lot of money, you have a lot of spending. When you have a lot of spending, because of people have a lot of money, you have a lot of inflation, and the Fed is trying to fight that, right? You with me? Now, if you're doing very well, people are still spending. Right? I've already kind of like done that, right? So we are likely to project. Markets price in everything. There's going to be a projection that maybe the Fed might still be hawkish. Maybe we're going to get another 75 basis point rate hike, or 100 basis point hike. It's not what Powell wants. Remember, Powell is a dove. He's so dovish. We saw him in 2020. Powell wants to go back to printing money. He wants to go back to printing money. When people print money, people are happy. When people are happy, people vote the right people. The people are printing money. Everybody gets to keep their job. Everybody's extra money in their pockets. The stock market soars, etc. So he's in a rush to kill demand so he can stop increasing the interest rate and maybe start stimulating the market again by printing money. Guess who literally signed a stimulus bill a few days ago? Joe Biden. Joe Biden literally signed a stimulus bill. Once again, people, what is a stimulus bill? A stimulus bill is basically a bill that talks about printing money, giving people money for handouts. Whether it's because now there's monkeypox and they want to shut things down again, I don't know. But I know there's a stimulus bill somewhere around there. It's preparation time. So Powell is going to be looking at this data going, damn, the economy is hot. Damn, 500,000 jobs were created. Damn, unemployment is falling. People still have money. If people still have money, people can keep spending. That means they are not yet feeling the full effect of a recession. That's number one, because the recession just started, right? When the interest stage. A lot of people think, nah, it's not a real thing. Ask the people in 2008. It's a very big real thing. But because you're not feeling that impact right now, it might blind people. Now, if it is natural, then, you know, if you were following the charts on Friday, and luckily enough at the workshop, I was able to do, you know, just that. You'll notice that as soon as the NFP data came, the dollar became strong, and that makes sense, and stocks fell. So NASDAQ dropped by 1%. You can see on Friday with the red day on NASDAQ, and that's kind of like normal. But here's the beauty about this, and this is literally like a good study session that we're having right now. I will get to signals. Just give me a second. Now, I always tell you guys, and I've been telling you guys this the whole year, when the NFP comes, don't be like normal retail traders and just look at this down and start trading or trading spikes or ticks or whatever. Number one. Number two, understand what it is saying to you. Look at the other two things. Unemployment rate has dropped. You understand what that means, right? Less people have been unemployed, right? But look at the average hourly earnings month over month. The expectation was 0.3%. That was the expectation. But what we actually got was 0.5%. Okay, that's interesting, but maybe it means nothing to you. So let's break these numbers down so you really see why that is my attention. Now, if the expectation, remember I was telling you, this is absolutely important. Now, the expectation and I just want to quickly move my notes over to the whiteboard here. If the expectation was 0.3, which means the experts and the Harvard economists and smart money and the banks, etc., are saying, we think we're going to get 232,000 jobs. We got 500. Fine. Then we think that wages are actually going to move up 0.3% more month over month. This is month over month, right? They're going to move up more month over month by 0.3%, right? So slowly we have an expanding economy that's creating jobs, and people are going to want higher wages to meet inflation. So we expect it to go. If you're earning $1,000 US, you should earn at least $1,000 US plus 0.3% month over month, you know, to keep up with keeping that $1,000 US to buy whatever it buys, so it loses its value. So you have $1,000 US with the buying power of $980 US. I hope that makes sense. But what happened was it went up to 0.5%. And you're like, Leroy, is that really a big deal? Well, if you think about it, it is, because these numbers are month over month, and the real number that we look at is when the number is now being annualized. And I told you guys this all the time, multiply these numbers by 12 to get an annual picture. An annual picture is a 1 year view. After 1 year, how much does people's salaries, their wages go up by? At 0.3%. And don't be shy, don't be shy. I've got flu, so it's an excuse to just simply use a calculator. Just use a calculator. You know, don't guess these things, because you need to see the difference. You need to see the overwhelming difference. I already had one open. Right, so look at this. 0.3% annualized. Oh, whoops, sorry. 0.3% annualized is 3.6%. So if experts are right and the annual average wages went up at 0.3%, annually, it means people's wages have gone up. There'll be an increase annually by 3.1%, 3.6%. But because we got a reading of 0.5, look at how that changes the annual reading. 0.5 times 12 is double. That means now the economy, people, companies have to pay people almost double the expectation annualized. 6% more of their wages have gone up by the end of the year. That's crazy, I think, because again, the Fed is looking at these things as typical signs to make a decision. The Fed needs to make a very big decision. Now, the decision for me has to be around this. Now, if we've got this gap of 3.6% per year, but we're getting a steady annualized rate of 6%, right? Is this good or bad news? I keep asking you this question. I want you to think about it. Is it good or bad news, right? Because good for who? Good for the workers. Good for people getting an increment in their salaries. Sure. Good for all the people who got jobs in July, like all those 500,000 jobs in NFP. Sure. But for the Fed, this is double bad. This is not good news for the Fed because it's not killing demand. The demand is resuscitating. People are spending. Their salaries are going up. There is more money to spend. So the economy is still overheating. Now remember, last thing I'll say before I get into charts. Remember, Powell kept saying we have arrived at our neutral rate. And if you follow my channel, you'll see I've already got a scheduled in video dropping this week where I talk about this thing on the whiteboard so you can really see it. The economy, guys, when you increase the interest rate, the economy takes anywhere between 4 to 12 months to feel the effect of what the interest rates are going to do. We still to see what they're going to do to these companies that are hiring all these people quickly, right? It's not yet over, is my point. Now, when the neutral rate, which is where Powell believes they are, I think it's about 2.50% right now, which is how they've been rate hiking. When the economy starts to finally absorb this interest rate, plus all this news, this hot news, markets are creating double the expected jobs, markets are increasing the wages, people are still spending, things are still good on the thing, we might have an interesting Fed meeting. Now, this is just one jobs report, all right? We still have 3 more to go, another job report and 2 CPIs. So on August the 10th, while I take my family and my son away to celebrate my 8-year-old's birthday, I am leaving it up to you. The markets are in your hands. Hit me up on the comment section, find me on Twitter, Instagram, spam me, send me some love, and let me know what is going on with CPI, because I will not be allowed to check my phone, while we're celebrating my child's birthday. So I only know this stuff at night. So let me know, and I'll see through your messages. But 10 August, write this date down. CPI is important. Build this case up, right? You want to know more, you want to get more out of the market, learn to create these cases, build these cases and follow the logic, because my point again, in case it's not clear, is that CPI is absolutely not CPI, but the first set of data that we have right now is not a good sign. The economy is not slowing down. Recession hasn't literally bit the economy yet. And for people, and a good sign is just depending on who you ask, right? I'm still a bear, right, in this market. I look crazy right now, still being a bear, by the way. But the economy is not slowing down. We have double jobs. Wages are rising. This is hot, so watch this out. Now, check this, the previous CPI report. That's the last thing I want to show you. I want to show you this stuff, and then we're done. Let's go to CPI. Let's go to the 10th of August, because it will just show us what happened last time. I find this so fascinating, by the way. I find it so freaking fascinating, right? So on the 10th of August this coming week, CPI drops on Wednesday, right? My boy's birthday, right? He's gonna go play with some lions and stuff, right? So there we go, 2:30 p.m. CPI, it's gonna be 8 p.m. I don't know, whatever time it is. I don't know if I'm locked in and it is my time zone, but on Wednesday, just watch out, CPI is gonna drop. Now, remember, this is the CPI report that we got last time where we had 1.3%. Literally, inflation came out super hot, right? Annualize these numbers. It's just wild. It's very wild. And what this means is prices went up by 1.3% more than the forecast. So previously, the experts thought we were going to get 1.1. It came out at 1.3. Now, a few days from today, 3 days from this war room's recording on Sunday, on Wednesday, the experts believe inflation is going to only move up 0.2%. Why? Remember, there's that argument that inflation has reached a peak. It's peaked now, and now we should expect low inflation. That's the argument. Inflation has peaked, Leroy. There's no need to worry. We should start seeing prices dwindle down. Okay? This is a very, very, very big argument in the market, and that's what a lot of traders, smart money, they're split, but some of them are moving with that logic. And once again, I don't know what is going to happen, right? But I just find this so interesting. Like, you truly believe the month before, inflation shot up, it literally at 1.3% month over month, and now it's going to come all the way down to only seeing a slight increment of 0.2% month of the month. And these are the experts. This is what I care about. This logic to me is interesting, because if at all that happens, right, and this doesn't happen, sorry, so if this fails, and maybe we get something like 0.4% or 0.5, and that's where I think I am. I think we might see an inflation CPI reading of 0.4, 0.5. So it will do two things, but in a weird way. It might confirm that maybe inflation has peaked and is coming down. It's no longer as hot as 1.3% every single month, but it won't meet the 0.2 expectation. It won't meet the expectation. It might confirm that inflation is slowing down, but it won't meet the expectation. This would still be lower inflation compared to 1.3%, but because it's a miss, we did not meet the market expectations, markets could still go down. Yo, man, this fire. Markets could still go down. All right, markets could still go down. So it's just kind of like some stuff to think about before we look at our our trading setup for today. I really hope you enjoyed the introduction. By the way, I hope you've gained a lot about it. Please don't forget to like the video. Don't forget to subscribe. Don't forget to hit the link below for the course and become a full-time member of 365 Trading Academy. Would love to help you. Would love to empower you. My main goal in general is to help people master their finances. My purpose in life, everything that I do, all the programs I come up with, I'm trying to figure out a way to actually empower individuals in this particular time period. There's never been a greater time period to do just that. The combination of a bear market, right? Prices falling down, stocks dropping, crypto dropping, and good information always creates a great basis point for your life to start flying high, right? So that's my job here on this channel. Shake my hand, ladies and gentlemen. Now let's look at some charts for the day. We're going to look at some charts for the day. Today I'll be looking at a couple of charts, and then we'll see, man. I am already tired. My throat is sore, but let's see how far I can go. Let's see how far I can go. I want to look at a couple of things that I was speaking about on Monday in the senior traders room. Last time I spent time with my senior traders was Monday. Tuesday I was prep time. Wednesday I was traveling. But this is what we looked at. We looked at copper, so we're going to look at that right now together. HG1 exclamation mark is the ticker for copper, because I know it gets confusing with these futures and all that stuff. We're going to look at Brent oil. Your broker might have it as UK oil, depending on which broker you use. Then I'll talk about crude oil today. You remember we had a very good trade last week on crude oil, some short, nice intraday play, good buy, good sell. Wow, lovely. So I want to look at swing trades now for these oil charts. Then I'll look at some charts that we don't always look at on the war room. That's because these charts are so set in their ways. You know, they are specific profiles. But we'll talk about why, you know, you should start to look at them. USD Mexican peso, USDTRY, a beautiful buy profile asset. Please note, this is what we call our annualized pair. This is our annualized pair in the senior traders lounge. How do you become a senior trader? You don't pay, you don't join. You join the course, you do the course, you grow your account according to my rules. When you've mastered, you not contribute, but when you've grown your account by 900 to 1,000% without breaking the risk management rules, you become automatically a 365 senior member, because you've really gone through the trials and tests of the markets, and fundamentally you can be trusted with more, right? But an annualized pair in the senior traders war room, my voice is really going, guys, is actually a chart that you always want to open a position in, and then take note on when you open that position, not only come back to take profits after a year. Why? seldomly ever drops. It's a buy profile. And we'll look at the chart, you see how once in a while, very rare do you get these entry points, but when you get them, you want to hold them. And annualized payers, guys, do something incredible for your trading. I don't know if I've ever spoken about this with you. This is why you must join so we can talk about things. But look, an annualized payer does a couple of things. Number one, keeps your equity up. So in a war room like 73, 74, where we only had one bad trade with 15 pips and we're up 600 something pips. Let's say it was a bad war room, like the previous one we had earlier on during the year. So let's say you have 6 bad trades. Now your capital is suffering because now you got 6 trades times, the risk of about 5% per trade, which is quite crazy for a small account. But it's just how it is. You've got 100, 200, 300 US dollar account, right? So you're already losing quite a lot of money on the hit. Having equity up allows you to quickly beef up your capital if need be. Also protects you from being margin called if you need it, right? Because these trades are always running, and if you get a good entry and you hold them long enough, they are now just profits. All right, so all you do is you lock some profits in, you just let the chart do its magic. But you're going to see it for yourself. Why we call it our annualized pair. And then we're going to see if we can find some opportunity. Nifty 50. I have to start looking at Nifty 50. I'm absolutely proud to announce. I don't know if he's watching, he's getting ready to travel. Say my Siri, my boy, my little brother, my blood little brother, my 3rd little brother, about 19 years old, is about to start a new journey in India, right? So we're going to be looking at Nifty 50 because he's going to be doing a lot of work for me there in India. I'm opening, hopefully, faithfully, a trading floor there through him. He's going to also further, a couple of his studies and all sorts of cool stuff. But Save My Series, the youngest senior trader, in the 365 traders, senior trader cluster. He was one of the first people I taught for about 2 years before I even started teaching other people. And he stayed a good student. Very young when I started teaching him. He was about 16, 17-ish when he started, but he was still doing high school. So my little brother, on the 8th of August, tomorrow, will be on a flight straight to India to start his new life. And so we're going to, start looking at the Nifty 50 quite closely, just so I can keep an eye on the stuff that he's doing that side, but also to provide you guys with trading opportunities on a whole new market we've never really looked at in this war room. So we're going to look at Nifty 50 today, just to start the young man off, and we're going to look at the Australian index, AU200 AU. Sometimes your broker will have it as SPI 200. Just depends on the broker you have, right? IC markets, arbitrate, that's where I play. But yeah, we're going to look at that right now. Then we'll look at Russell 2000. Russell 2000. Guys, and I think maybe just for the sake of my voice, when I look at China 50, and then we're going to call it a night. Why? I could always come back tomorrow and just finish this up for you. What I wanted to look at was those trades that I said we're waiting on. The ones that are waiting on for more room 73. So when I look at AUD, USD, I also wanted to look at Swiss franc, JPY. I also wanted to look at pound, JPY. I also wanted to look at USD CAD and AUD NZD. So what I can do is combine the trades we are also waiting for in War Room 74, right? So this will be tomorrow's War Room. I'll do it for you, I promise. War Room 76 tomorrow. We'll have a look at these particular charts. But I think today, let's keep it short and sweet because I've already spent a lot of time breaking down a lot of things, and I'm really struggling to. I don't know if you guys, you might not hear how terrible my throat is after I'm done editing the audio, but I'm suffering here. So tomorrow, please expect also Euro Pound, an update on Euro Pound. Expect an update. I'm just looking at my trading journal and what we have waiting and what we're not triggered in. XAG, this is silver. Some silver. Expect an update on gold. USD. Euro USD. NZD, Swiss franc, and so forth and so forth. So these war rooms will just cover, time and time again, all the other stuff that we haven't been triggered in, but we also want to kind of look at. So I have a full-blown war room for you. NZD/JPY, we took it already up 133 pips. Okay, so the last one is EUROCAD, right? So please bear with me. Let me sit down with myself tomorrow when I'm feeling a bit better, and I'll look at that. So today, we're just going to keep this particular war room nice and sweet. And we're going to look at the charts above, just get a feel of some other new stuff that we really don't focus a lot of the time on, and then start to assess what we are doing here, right? So the first chart is copper, and let's go straight into that, right? So I'm going to hit preview here, right, there we go. Right, so there's copper. Now, if you're in copper with me, you know, I'll tell you when we spoke about copper in the war room, 70 something, natural gas, Bitcoin, Nasdaq, I can't find it, I don't want to waste time, but I hope you're in. I hope you got in on the 15th of June when we set it up for everyone here. But copper has been doing quite well. Copper had a down moment when gold was falling. Remember, these minerals, the primary market is gold. Palladium, platinum, copper, silver, the primary market for these guys is gold. So whenever gold is doing well, these markets will do well. But whenever when gold is not doing well, these markets will suffer a lot. And there's been a time period where we've been selling gold, calling for more bearishness on gold, and it has fundamentally resulted in what you're looking at, right? But if you go to War Room 64 on the YouTube channel, you'll see me point out that area of value there as a good place to buy copper. War Room 64, chapter 11 was the copper chapter. Just have a look there and see what my insight was all the way on the 24th of April. And waiting for this perfect sell setup to come to an end. Copper is now up on already. Now we've got this tight, I don't even want to call it a trend line, right? Because it's not a correctly drawn trend line. Don't forget, for a trend line to be correct, it needs to have market structure features. You need to consistently see high highs, higher lows, lower highs, etc., etc. And then you can say, geez Louise, we have a trend line, right? So if you can't do something like this, right, you don't really have a trend line. So I've just drawn a line. At best, that's some type of vertical resistance. At best it means nothing. But for me, it's just clear push, because if it is a way to wipe out all the selling, then it also means I might not have to necessarily worry about any of the supplies along the way. I don't have to worry about the supplies along the way in the sense that these supplies would drag price all the way down to zero, kick me out. Then what I want to do is I want to start to understand these price lines as places of potential retracement. So if you miss the primary entry on copper, but you attended the war room, once again, you need to realize that your discipline is one of the reasons why you are not going to make it in trading. Your ability to pay attention, to stay focused, to document is one of the reasons why you're not a successful trader. Sometimes it's just simple that you're not organized, you're too busy, and it's okay to be busy. I'm very busy. I am extremely, extremely busy. Never too busy to make money, but busy for many other things. So what do? I wake up at 4 in the morning. I have 3 journals, 4, 5 journals, all purple. I love purple. Like literally, war room journal. Like I've got journals and journals and journals, and then I've got electronic copy of these journals where I update my stuff on the spreadsheet to keep me organized. I have to. As a trader, you have to stay organized or you'll miss good money. Right. Now, for you guys who are not in it in copper, you are trying to find your way back in, and it's going to be very tricky, right? You are literally now going to buy outside of a confluence zone. When we bought copper, we bought inside the kisma, the touch of a weekly, order block with a very strong imbalance. Buying anywhere in between is dangerous because markets are allowed to turn back and retrace. So on the daily time frame, you might be lucky that this area holds. If this area holds, for me, obviously I've already closed, taken profit on 1 trade, but I've got 1 long trade running, and the 3rd trade is when I break even. So if this area holds, I might even take a 4th entry here with you, and if it does hold and it seems like it's doing well, then I'll officially be risk-free on this chart because I'll move all my stop losses just under this particular area. But for some of you who are not in it first, we're not in this particular main buy, the first buy, then you really are hoping that this area holds. and price might come back down there. For you, it might not. Might be the supply higher there. For you, it might not. I don't know. But it's something to look out for. So please bear that in mind. Also bear in mind that because you're buying a little bit higher than where I bought, you are now more at risk than me. I'm still in the buy. Even if this area does not work, I'm still in the buy. This is something that you need to accept as a risk when you're going in. If the buy runs very smoothly, then we're looking at a full run up there. Always nice to know where the retracements will be for a bear's market. So I'm pulling out Fibonacci, and this is a very good place to take profits. Okay, don't worry too much about completing the race. This is a very good place to take profits, only because we've got a big area of potential retracement for the sellers, where the sellers feel like the price of copper has gone back high enough. Now we can make profits, right? And what I like to do with that, because I like to enter with 3 solid positions, knowing exactly where I'm going to take off. For my entry 1, I've already taken profits. You guys remember my rule, right? I feel like teaching today, and my throat doesn't want me to teach, but I feel like teaching. I feel like really opening people's eyes today. Right. Rule number 1 for trading is, first of all, you gotta know your risks, right? So you need to split your risks. You need to understand your capital. You need to understand how much you need to risk per trade. And this is running trades, exposed trades. As long as those trades you're not broken even, and they run the risk of coming back to it or loss, you must know that number. Now, once you do that, you need to have some type of risk assessment. If you have an account between 100 to say 800, let's make it 1,000, 100,000 US dollars. This might not be for you right now, because if you really think about it, 100 US dollars means you can only go 0.01 to risk 5% of your account per trade. Why do you want to do that? Because it is smart, because you're intelligent, because you know this ain't the lotto. This is not your daddy's market. It can take all your money. So you want to go slow, go slow, go slow to grow, right? That's why you do it. But 0.01 where 100 US dollars is 5% per trade, is you risking $5 of that 100 US dollars per trade. Why is that important, Leroy? Because it means for you to blow your account, you have 20 chances, 20 trades. You have to be wrong 20 times. The only people who can be wrong 20 times in the market, back to back at 0.01 on 100 US dollars, are people who still haven't subscribed to this channel or have not hit the link down below and joined the course. Because you need to know the 8 types of supply and demand, the areas of values, the rules, and you put it together in a multiple time frame analysis, all the stuff that I teach. You have to know that stuff. The person who knows that stuff can start to grow their account. When you know all of this, now you start off with what is your overall amount you can risk. So let's say you got 200 US dollars or 300, whatever it is, that amount in dollars, that would account for 5% risk. Listen to me. The amount in dollars that will accumulate 5% risk for your small capital, you can then divide that into 3 entries. Divide 5% into 3 entries. Not create 3 entries, each worth 5%. I'm not saying that. I saw someone do that in the one-on-ones. I'm not saying that. I'm not saying create 3 entries, each worth 5%, because now you are 15% at risk. That's too much of your capital. It's not worth it. Yes, 0.01 gives you pips and cents. That's what you deserve as long as your capital and your skill set is low. Grow from that. David can Goliath with a small stone. Grow from that. Now, what I'm saying is, once you get the dollar amount of what 5% is worth, you divide that by 3, then you have 3 entries. Your first entry is TP, take profit target, is always 1:2 when it comes to risk to reward ratio. You only want to recoup back the amount you're risking. I'm risking $5 in the market. I'm gonna make $10 and I'm out. Why? It keeps your capital afloat, because you've got 2 other entries that still need to run before you can even break even. Entry number 2 is the classic entry. The TP is always 1:3. This is good risk R&R. This means you live to trade another day. I'm risking $5 in the market to make $15 in the market. I risk $5 in the market to make $15 in the market. I've done the breakdowns many times before. in the description of this video, just go to their two-hour classes I give on risk management, and I break down why this makes so much sense. All right, why risking $5 really makes so much sense. If you're trading a bigger lot size and you're risking 50, you better be making 150 on entry number 2. Entry number 3 is your Hail Mary trade. It is the swing trade. It is the blind swing. You hold this guy. You hold her for dear life. You get married to this trade. You don't get married to all your trades. You propose to your swing trade. The swing trade, you break even. Do not be crazy, so stressed about money that you want to hold on to something so simple. Remember, you've already made up the money you're risking here at 1:2. You've already made that money. Remember, you've then also made 1:3 on entry 2, right? So technically speaking, you're up 1:4 on the trade. You're done. You've made money. But if you're right and you've taken the course and you know where price is going, if it's going for the governing supply on the governing time frame, then all you want to do is swing entry 3. You break even, so it doesn't cost you money. Every 2 weeks, every 3 weeks, you move your stop loss. You lock a little bit more profit, but you allow price to move, to grow. This becomes your annualized pay. It becomes your paycheck. It becomes the type of trade that will guarantee you money, equity, and growth. Okay, that's honestly how I want you to do it. Okay, right, look, I really hope this helps you. I just felt like I should break this down one more time, right? So this is how, I'll be playing the copper trade. This was what I was trying to explain. I hope it helps you. I hope your ears of understanding are heard. Now, because this is a good target for trade number 2 somewhere up here, there will be a retracement for sellers. So if we're still in a seller's market, and we'll have to see what gold is doing there. Then, price might get pushed down, and then we shall see the yin-yang between this demand and this supply, right? But if the supply gets broken over time, and that one trade you've got on break even, or some of you only trade running, etc., then you really want to, play with it and see how far it can go. Just quickly look at the weekly time frame. Right, this is a very good target for the weekly time frame, right? That's a very good target flow. So there's a lot of potential right here on this chart. A lot of potential right here on the chart. Just want to show you the weekly more clearly now. Do something like that. Where the big fall began, right? So markets, complicated 365 candles, beautiful imbalance, and this is a very strong sell point. You don't want to be holding any buys past this point. You probably want to change teams and become a seller when markets get us somewhere up here. So what it looks like on the daily time frame, right? So I've adjusted area of value to look something like this. This is how far you can go for now on copper, but we'll see what gold says. But somewhere here is that 61.8%, so just be mindful of that. And if you are a risk taker, then the next buy is somewhere here. Right, that would be my guess on copper, right? So copper, done. Brent oil or UK oil? Right, so Brent oil is finally now under $100 US. I think that's quite remarkable, right? Remember, we've been tracking these markets for a very long time. They've been very stubborn. They have been literally scaling above $100 US, which kind of like triggered inflation recession for most countries around the world. So it's always interesting to see oil below 100 and also very interesting to track oil above $100 US. But both right, there's not much on the markets to confirm why. I don't know where we are on the oil. This is the loudest I can, by the way, get now with my throat. I don't know what's going to go on here. The Chinese, Taiwanese, Nancy Pelosi, and all that kind of stuff. I really couldn't be bothered, right? So oil in general, right? Monthly lows, right? Oil prices end week at multiple monthly lows on recession fears. Right, so you've got Brent oil under $100 US. We've got crude oil also under $100 US. We're just waiting for all the gases to also, kind of like drop and follow suit, right? So what's the trading idea here? Well, let's look at the chart here. Like I say, this is the kind of trades that we like to take in the senior traders lounge. So we're already in these trades, but you know, markets always retrace and give room, right? So we live in an interesting world where the possibility of Brent oil dropping back to the 70s is very high. All right, the possibilities of Brent oil coming all the way down to the 70s, 78, 79, 80 US dollars per barrel is very high. And that's what I'll be looking for as an exit target right now. All right, when we get down here, it will get very tricky, right? We don't know what will work, how long it will work, will price come this low or that low. But for me as a seller right now, I think getting out of 77, 78 US dollars per barrel is a very smart move. Looks like a good swing, right? If I go to the weekly time frame, right, you can see markets have made contact with the governing supply, very important. And then now all I'm waiting to see is what happens here, which is where most of you enter. Because the bounce on this weekly demand, if it is at all a bounce, and I'll tell you why I say if. Look at the candlestick formation here. You gotta study this stuff. Look at the rejection of this wick. It got filled. I hear you. It got filled. But this is not a confident bullish engulfing candle. It's a bullish engulfing candle because it engulfed, right? It engulfed. Great. But it's not a confident bullish engulfing candle. It went through a lot of sell pressure that month of February this year. All right? It literally went through a lot of sell pressure just before the explosion, just before the Russian-Ukrainian war. And so my understanding when markets do something like this is just be very careful of the activity, buying and selling activity around this particular order block. That's number one. Number two, if you look on the other side of the not so confident bullish engulfing candle, we have a very confident bearish engulfing pattern. Very confident bearish engulfing pattern that supports the landslide. Right, and so by the time we get to the daily time frame, we will then start to see very clear market structure as to why we took this sell in the senior traders room, right, and why we're still holding. It's only been just over a month from about June, but it's still a very good bloody trade. It's a really good trade, right? So this is what it looks like on the daily. Now, let's quickly draw some demands. Let's take this one, for example, with the long wick, right? One would make the argument that this area, this long wick here, damaged this, right? Didn't break it, but damaged it quite a lot, to a point where we are absolutely sure there's not enough buy orders to sustain that. If that is the case of the daily time frame, let's go to a Kinihashi and see what the volume-based candlesticks are saying, right? The volume-based candlesticks are saying, look, man, maybe you'll get a fight down here. And that's what I'm waiting to see. Those of you who are not in this trade with us and you'd like to get in, you really want to see what this fight looks like. Because if markets drop a little bit lower here, then you are starting to look for some sell retracement. One of these two that I've just pointed out. Either something like this or something like that. But the general idea or the sentiment that I'm getting from the chart is that markets have a deep desire to keep dropping. This is basically written there, oil prices end week at multi-month lows on recession fears. Right? So recession is still quite a new thing that parts of the markets are still trying to digest and come about. But nonetheless, recession is here. Now on the weekly time frame, you can see the first sell point is very much in line with the most recent immediate bearish engulfing pattern on the weekly time frame. We also draw a bunch of supplies. It would look like that. You can see this supply was mitigated, which is perfect. It's what we want to see. And now we've got this new supply here. Let's quickly make them yellow. Oh, yeah. Right, then I move to the daily. Okay, we've got the same picture that I've just shown. Right, so I would, just tighten this on the daily and then tighten this on the daily. Right, so I would be watching out for this. This looks like very much the NASDAQ cluster on the daily time frame. You'll see it on Nasdaq, S&P 500, US 30. It's a weird class like this, the price has just arrived at. You'll start to see these things the more time you spend with the charts. But yeah, this is where I am. So because we sold right at the top there is my stop losses and break evens are here with block profits just above that area, some of us anyways. And we're just waiting to see how price drops. And what I want to see and what I'm proposing I do, and you can do it with me if you want, is to try and sell here first and see, knowing that there's a supply above and taking the risk that markets might actually break through our supply tag there. So I have two sell orders, one here and one there, in the event the sell order holds price and pushes price down. Right, so that's what I'm doing when it comes to Brent oil. The next chart I'm going to look at is crude oil. Right, the last time we spoke about crude oil together, probably the previous forum, I feel like it was just last week Sunday, or the Sunday before that. No, it was War Room 73, I guess the previous Sunday, 2 Sundays ago, whenever it was. I drew this big area here and I said oil is going to range for a little bit. You can see there, 25 February, came back to the same place, 16 March, came to the same place in 11 April. Every month, every 30 days, oil comes back. Oil came back, April again, and then skip June, July, whatever, same spot. And now finally, we've broken out of this range, right? I drew this range for you for that purpose. Now, if you remember, we're on 1 hour supply, a sell. I took profits, but it would have been really good if we had held that trade. But because of the range, you never know how long ranges last. Okay, so oil is falling, but let's see how far it will fall. The same thing that we did for Brent crude oil, we gotta do for Brent oil, we gotta do for crude oil. Sorry. Right, so I'm on the governing time frame for oil, made contact with the supply. Price has been dropping steadily ever since, and you can see same thing here. As far as I can tell, for me, anyways, oil should come back to 77, so 77, 78. This is crude oil, just like Brent oil, and these things generally move fairly together, right? The next big push up that we can consider in oil is around 77, 76-ish area, and even that could later on be contested when markets get down there. But this is a good place to wait, right? 77. If you're a seller, then we should be looking. I'm not a seller inside crude oil, but I'm happy to start looking for some supplies to get into, right? So we can see here, I can delete all of this stuff and then see it when we get to the time frame, right? So we can see there is a very strong possibility that markets could rally up to this weekly supply, and only there, somewhere inside there, would be a really great entry for us to take, right? So this is the daily time frame. Just going to close that, right? On the daily time frame, I have a couple of things going on for me. Right, so I've got this nice bearish engulfing pattern that markets mitigated this week, right? If we're trading this Monday, trading oil this Monday, all of us would be in this trade. Right, this Monday, Tuesday, markets triggered, hit this area, and have been dropping ever since, right? I'm not in the sale, but this is just literally what happened this August, how August started. This is very good money. Oil pays quite well. Right now, I don't trust that demand, man. I think that's why I marked it gray. It's not that appetizing, right? But it's got a good imbalance nonetheless, so we'll see. Right, so I'm not a buyer in this market, so I'll not be buying here. I do hope that this demand does magic and sends price back here. Right, and if markets can come back there, then I'll definitely try and enter this particular market and see if I can become an official seller, right? All the way back to down, right? The only thing to be aware of is that, we're selling very much close to levels that have been sold off before already. So we're not entirely sure how strong the sell orders are in this particular area, all right? And that's very important. There's like a slightly medium, high risk trading setup. We're not entirely sure how this area will rock with us in the long term. So please just bear that in mind, right? So that's oil over here. Okay, that's the trade idea anyways. Next chart that I want us to look at is EURNOK. Some charts I won't spend too much time on. I just want you to see them. I want you to see those annualized type of charts so that you understand the stuff we're doing. right? So, okay, I see. So all the lines and percentages, a lot of you don't even know what this is. It's kind of like something I can't teach you right now. There's something called the supply and demand curve that we deal with in our module 2 of the course. You need to learn how to draw a supply and demand curve to know how it works and see price operate at that level. You can see markets definitely came on the higher end of the curve here, all the way to 100% to get that sell orders, and now markets have now crushed the 50% line. If you don't understand what that is, it's fine. We'll keep it moving for you. Let me just open a clean chart. But anyways, 365 registered students, go draw a curve on EURNOK and tell me what you see. But so here's a clean chart on this particular pair. Very clean chart. Very, very clean chart, right? And yeah, man, it's not looking good. It's really not looking good. And the fact that we know that on the supply and demand curve, markets have arrived at the ultimate sell point and we know what we want. Supply to demand, demand to supply. We know where price is going. Right, on the governing time frame though, please pay attention to this because I've tried to remove all the noise, all the lines. Please pay attention to this. This is a very good, this is a simple assets you can trust, man. These are annualized paid assets. You get in a good position, you hold, you stay disciplined, make a lot of money. And I'm not asking you to hold these trades for the rest of the year. You want a growth in your trading account, you want to start next year, you need to be starting about 2023. Right now, if you would literally have to be starting, you're not a millionaire yet, you realize you were a little bit ambitious, yada, 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 yada. What can you do to get there? Number one, you only know what you know. To know more, to act more, you have to act in that level of knowledge. To do that, you have to think more. You have to get that information. Come to the podcast. Number two, if you're a trader, you have to apply the rules religiously, systematically, documented all the time so that you can see consistent growth. Number three, some of these trading setups I'm giving you, it's August, September, October, November, December, 5 months. You could hold some of these trades for 4 to 5 months and actually have real capital to trade seriously, right? A serious trader is up to about 10,000, 50,000 US dollars. But not everyone can start there, and you shouldn't start there. I'm against people starting with big capital. Oh, you blow it all and book yourself in a hospital. Start with 100 US dollars. I've turned 100 bucks into incredible money over time, right? So I know it's possible. I know it's possible. I have 109 proven, verified, 365 senior traders who've done it. Small accounts into big accounts over time. But the problem with you is you're not starting now. So over time for you is in the future. You still to go through the growing pains. Use these 5 months to secure the bag, man. Use these 5 months to learn if you need to learn, to do whatever it takes. But anyways, there's a new supply here, right? And wouldn't it be beautiful? Would it not be beautiful if this was to happen? I'm not saying it will, but if this was to happen, right, this beautiful drop, this would absolutely be incredible, right? So the 9% drop in the actual currency value, but that would be a very nice move to the downside, right? So this is something to potentially catch and look at, right? Let's go to the weekly time frame. Let's see what we're dealing with here, right? Markets are already given us an imbalance on the weekly time frame. Markets have confirmed my suspicion the price wants to fall, right? And this is literally bearing on supply on top of the supply, and markets really holding their ground and price is falling, right? So the first time we will see a weekly break of market structure is when price closes as a red candle just below this white line. When you see that BOS break of structure, we are going to have to make some serious choices because this could happen to this green candle. Then we drop, which would be great, or we will then decide on the type of imbalance markets will follow through in the month of August. So this might be a better peak than price will drop. But nonetheless, this is a nice long-term trade to hold as a sell, right? But right now, it's very difficult for me to give you guys any type of entries. But on the daily time frame, for a short-term entry, high risk entry. So what you want to do is you want to confirm it. You want to give yourself a confirmation tool. Who's our confirmation tool? We have anti-Fibonacci. Anti-Fibonacci. As long as we get a swing high, swing low, we pull up the Fibonacci. We never trade confirmation tools. We are supply and demand traders. But what we want to do is want to use the confirmation tools to confirm our bias. So I saw an area of value there. potential trading area of value. I want to see if I should take that area of value based on my confirmation too. So that's area number one. And then I've got this weird distribution of a Talitha area. You don't know what a Talitha is, it's because we haven't done the course. Can't help you there, right? But there are two supplies closely linked together. One at a golden ratio, one at a common area that deals with a PCP and a retail trader. The smart thing to do if you have a lot of capital is to go very low risk on this area in case it does sell, and then go a little bit better risk on this area in case that's what price wants. Right? If you've got a small account, then the smart thing to do is to accept that you might not get triggered, but to only wait for the higher supply. If you have a small account, only wait for the higher supply, because that in the end is what will actually keep your account safe in the long run, right? So now that I have all of the confirmation rules there, and I noticed that I had a beautiful break of market structure here, which is kind of like where price is on the close on Friday. Once again, this is very possible. I would prefer we have a liquidity grab somewhere here, and then markets do that, and then I come back down with it, right? So that's what I'm looking at in EURNOK, right? Euro SEK, Swedish krona. Let's go to the monthly time frame. Excuse me. Right, I'm not in this chart right now. I'm not in any trade here, but it would be nice to see what's going on, right? So we've got an MTP here, major tipping point on the top there. We have a reaction to our MTP. We know that the charts are in sequential balance, always on a trip, always on a journey. And we have a possible destination all the way down there, which is for the later future. Don't get me wrong, so for now. Got multiple demands there. It would be impossible to really get the accurate one. That doesn't really help us much, right? So now we can start to draw things a little bit better. So that's demand number one. And you can see it was active, it worked, it did a good job. Price came into it, price left. When you draw your areas of values correctly, you know, they generally should tell you a better story about price. Okay, so we've got all these ladders, right? As markets, we live in the, and this was the last time. So we had a major turning point. And the last journey was demand back to supply. And markets did a good job of creating multiple steps to the upper side. Markets arrived now at the major supply. And now we have to wait to see if they want to break it or return back. Right now, it feels like price wants to come back down. When I go back to normal candlesticks, it feels like price wants to come back down. Bearish engulfing pattern has been ignited here, and markets are falling in the following month. So in July, with the completion of a bearish engulfing pattern, which is a sell signal most of the times, and in August, we had literally an activation of that area, which could be a potential imbalance to form. We've got a bullish engulfing pattern right there. I'm just going to put a line, right, of where all the selling might be stopped. I don't know if it will. Let's go to the weekly. Adjust that area of value to look like this now. Okay, and this is what it looks like on the weekly. Very beautiful. Right, so on the weekly, I can do this and do that. Right, and then say, look, man, I had this area here, didn't give me a strong imbalance nonetheless, and because it didn't give a strong imbalance, 365 traders, this is something you're learning in module 3. Prices that don't give strong imbalances rarely ever have enough power to break market structure, right? Remember, a weak imbalance is not a good sign. The market's ready to into that area of value and started to sell. So now we have to wait and see. I can't tell you where to sell right now, right? If this happens, maybe, but we're going to have to look at the anatomy of price week by week, right? So EURSEK is something we need to keep checking in on every week to see what's going on, right? First, see if the price can break the structure, And if it does break the structure, we'll then see if price can return. Let's see what it looks like on the daily time frame. On the daily time frame, if price was to break structure, so all the structure here, right, and eventually then break it for a sell, I would wait for this. That's what I'll wait for. I'll wait for anything around this area here, and not sell it. Down. My target down would be lower than the break of structure. It would be all the way back to that weird advisor we saw on the weekly, monthly. Right? Euro, Swedish krona, done. I hope it's done. USD, Mexican peso is an annualized adjustment. Dollar is always strong. Situation, you know, I haven't closed this. I'm still holding. And this is literally just a month ago. It's nothing too crazy. But let's do a breakdown of charts on the governing time frame. And I think I gave you guys a signal. I don't want to sound too crazy, but I genuinely believe we spoke about USD Mexican peso not in the senior lounge, but in the war rooms. In the war rooms. If I find it real quick, I'll tell you. You know, go check if I'm wrong. Check if I'm lying. If I find it real quick, you can go check if I'm lying. I just don't want to spend time perusing. But I feel like this was in the war rooms. USD Mexican peso, going once, going twice. I have to move on because of time. USD SAR is not what I'm looking for. But I'll find it and I'll put it up on the public telegram. When exactly I shared that chart. I highly doubt it was in the senior traders lounge. I think I was speaking to you guys in the war room. Right. So I'll spend time looking at my notes carefully and it will come about. But anyway, this is a buy profile asset in general. Why do I say that? Because markets are always moving up. The dollar versus the Mexican peso, the dollar will always remain strong. You know, we're so now that we've got a very strong dollar, etc. Right? So you can always expect some point of bottoming out on this chart and markets consolidating on this chart. Markets love to consolidate on this chart. When markets are done consolidating on this chart, markets always have a big, strong rally. After some type of consolidation, big, strong rally. And now here we are. Consolidation right here. After this, big, strong rally. Why is this important? Because if it happens, it will happen most likely again. The big, strong rally that I'm talking about always breaks previous highs. The big, strong rallies will break previous highs. The big, strong rallies after consolidation, big, strong rallies will break previous highs. After consolidation, the big, strong rallies will break previous highs. Hold it. Get in, hold it. Hold it. Hold it until it makes you $100 US, 1,000. Hold it. Just hold the chart. Hold it. There'll be many times to give new entries. Every time, after every week, when you're now active in a trade, you have to review the tape for that trade. There's a new area of balance being created. Take more demands. Take 4 or 5 entries as price progresses day after day. Now, on this particular buy, I find this so interesting. That's why I wanted to talk about this chart to you today. Got an unfilled order right there. Right, so anything goes. You can see there was some interesting liquidity creation right here. Markets then eventually dropped, created stop losses, and kept going up. But I wonder how long this up will last before it comes down, then up. That's what I'm wondering. So I do have a pending order here just in case, because you know fundamentally it will be very much interesting to see that happen. This is price going up now and then leaving this unfilled order. All right, USD Mexican peso done. Right, USD TRY. This is our annualized trade. Just look at this chart. Look at it for yourself. Buy profile asset. Look at it for yourself. Look at it for yourself. Look at it for yourself. Like beautiful buys in November last 2020. Hold that stuff. Just keep holding it. You literally have no pressure in life to drop. And even if price was to drop, even for a month or 2 months or 3 months, right, you will simply see how far price has to fall. It fall there, all markets fall a little bit there. But in any case, this is a winner, right? This is a big winner. I don't know if you're going to get an entry point right now. Some of us You know, as soon as you saw this big red candle, like last week December, this was it. This was like beautiful to kind of like try and test. But on the daily time frame, I see nothing incredibly, you know, scary. So the fact that I put a break of market structure there, then that might be the reason why. So that might be a good place to buy, right? It's just a reasonable place to buy. The next reasonable place to buy is down there, okay? But buy and hold USD, Turkish lira, right? Nifty 50. I'm going to use a wonder if a wonder will allow me. If not, I'm going to use capital.com, right? Excuse me. Right. There's not a lot of history in this chart because of the broker I'm using. Other brokers probably give us more information on TradeView, but that's fine. Right, so this is Nifty 50. You can see there's been this asset is not scared of selling. It's an index, top 50 Indian companies, but it's not scared of selling. All right, so I bring that up because it's important to know that this asset is not scared of selling. It's not just a purely buy profile asset. It's literally not scared of selling. So we've got this situation here. Got a drop, got a bearish engulfing pattern right there. Markets creating a beautiful imbalance. Markets are starting to, you know, equalize at the top, create or grab liquidity. They're not tapping this area, so watch out for it. And it would be very much fair to assume that the area could run that long before going down. Right? If you want to buy, let's say actually I'm wrong and price clears stuff and clears the way up, then you can try and buy down here. This is Nifty 50. Remember, indices are more expensive than currencies, right? So really just kind of like bear yourself there. Ladies and gentlemen, I can't. I apologize. I really wanted to get through all of this for you, but I am absolutely in ridiculous pain right now. I would like to stop here at Nifty 50. I promise you tomorrow, I will then continue tomorrow's charts, right? So all the charts I said I'm going to do tomorrow, I'm going to also start off with, we can revisit Nifty 50. Maybe my energy was low. We'll look at AU 200, Russell 2000, China 50, and all those other charts I said I was going to do. I promise to do them for you. My name is Leroy James Mystery. I'm the head trader of 365. I am passionate about you mastering your finance. I literally just spent about 4 weeks with a small financial institution that is paying us a whole lot of money to get what you get, partly for free here on these YouTube channels, but definitely at a ridiculous discount on our traders course. So I'd encourage you to please jump on that. You know, dedicate the next 5 months of the year left into creating the type of trader you want to become next year. It's not an overnight thing. There's a lot of rules you need to learn. But start the learning process. Shake my hand. I don't remember how I started this video, but shake my hand. It's good to see you. It's good to be back. I'm gonna go rest. I'll be back tomorrow again. 365, baby. Peace.